This week in Agribusiness, serving America's most essential industry, with agriculture broadcaster Orion Samuelson and yours truly, Max Armstrong, and featuring agriculture meteorologist Greg Solier. This week in Agribusiness is brought to you by Firestone. You never farm alone. Coming up on this weekend's broadcast, profitability of the pork industry. Can they stand the prosperity? Hello, everyone. Welcome to the broadcast this weekend. Mr. Pearson is not at the desk, but he'll be checking in momentarily from the World Pork Expo. We know that weather is on the minds of so many of you. Greg Solier will be along in just a few minutes to take a look at that crucial weather forecast for the growing season days ahead. There's so much hanging in the balance right now, to be sure. They had pretty good weather for World Pork Expo this week. It was warm, as it can be many years, at the state capital, Des Moines, Iowa. But they were back there after a hiatus brought on, of course, by the pandemic. And they were talking a lot about the profitability of the industry, the fact that those hog prices are so strong right now. Mike got some input on that, and he shares the insight with us in this visit.
Well, Max, here at the World Pork Expo in 2021, a lot of producers are using this time to sort of decompress and figure out the past 18 months. They have been on a roller coaster ride of prices and profit margins, and we wanted to get to the bottom of it. So we checked in with our good friend Dave BAUER from Cargill Provimi about just what this roller coaster has looked like when we dig into the numbers.
Well, I don't know if you've ever been on the Raging Bull roller coaster, but that's probably what it's been for a lot of people with the ups and downs of the market. One week we're looking at a situation, and a couple weeks later, then it's an entirely different situation. So there's been a lot of uncertainty with a strong undertone as we've come into this year for strong markets. And obviously right now I hear people talking from many different trading segments that would say the hog market right now is one of the strongest markets they've seen.
It is, and just looking at the past 6 months, 7 months of hog market moves, Dave, what have you seen when you look at the numbers?
Well, the transition is that we've gone from negative margins in fourth quarter to now we're looking at $75, $80 per head margins based on the CME index as a revenue over the next 30 to 60 days.
Dave, put that into perspective, $75, $80 per head. How often does that happen in the hog industry?
Well, I'll tell you, I've been watching it for a long time, and I've not seen that kind of a move when we've seen $50 to $55 rallies, and whether it be the cash trends or the futures trends, the negotiated markets, which are a true test of how much the packer is looking for hogs, and he goes into that negotiated market. That market's up 125% from the first of the year. So we're 55 to 75% higher in the futures and the cash market cutout and the CME index, but 125% in that negotiated market.
As you look out ahead, Dave, and I know you spend a lot of time working on producers to help their profitability forecasting. Talk us through what you're seeing, because we're also seeing a rally in the grains. We're seeing a rally in input costs. I mean, producers are going to feel a squeeze eventually, right?
Well, absolutely. And if you think back about it, when we were negative margins, we were at $3 to $4 corn. Now all of a sudden, today I show a 12-month average of $5.99, so $6 corn, but our profitability is an average $25 to $30 per month for the next 12 months. Now that's kind of weighted to the front end with a $75, $80 profitability for the next 30 to 60 days as the market is today. And then you get out into fourth quarter, into Q1, Q2 of 2022, and you're looking at $15 to $20 per head profits today.
How are producers taking advantage of these profitability margins? Because we've also seen some folks have some health challenges this past year in North America. PRRS was a bad issue, so there's some uncertainty from a production standpoint. How are guys managing this profitability?
Yeah, and that's been one of the big key factors of drivers behind today's market, and the strength we've seen in this market is we've known that from Thanksgiving to Christmas we had some pretty tough health challenges, and so those are playing out in market animals from now for another month or a month and a half. So our numbers and support to this market is going to be pretty good for the next 3 to 5 weeks. But then as you start getting out forward and we go from an August to an October contract and we start to see things fall off. So your question about what they're doing, working with their risk management teams to make sure that there is no rock unturned and to keep that pencil sharp, manage your margin. Don't be so focused on the market, manage your margin. It's a lot less stomach acid when you do it that way.
Just to put some of these numbers in perspective, Dave mentioned that $75 to $80 per head profitability are profit levels not seen in some people's lifetimes, Max. So this is a very big opportunity for domestic hog producers, but as Dave mentioned, there's always concerns looking down the pipeline into the future.